I'm Bridget Stomberg.
And I'm Lisa DeSimone.
And this is Taxes for the Masses.
Today's episode is on the effect of the Tax Cuts and Jobs Act on demand for accounting professionals.
The Tax Cuts and Jobs Act of 2017 aimed to create jobs. Although empirical evidence of the Act's effectiveness in stimulating economic growth and hiring broadly is limited, there is some evidence that it increased job opportunities for accounting professionals. In today's episode, we welcome Katie Doherty, whose dissertation examines the effect of the TCJA on public accounting firms' demand for tax talent. Hello, Lisa.
Hello, B.
I'm going to guess that you're in a fairly good mood today.
What makes you think that?
Not that I have any deep knowledge or understanding of what happened, but I've heard on the street.
Yes.
The Dodgers are now back-to-back World Series champs.
I kind of don't believe it. Like I told Matt Saturday night when they came back from behind to win it in extra innings that I was going to wake up Sunday morning and think that I had dreamt it because it was so freaking improbable.
You were pretty pessimistic on Friday. We talked on Friday,
Yes.
I think when they were down 2 games. Is that right? Or were they?
They were down. Friday was game 6, so they were down by one
Yes.
game, but they had to win.
Yes.
Yeah, and I was pretty sure they were not going to win until the 9th inning when they did win with an amazing double play to shockingly end it very quickly right before Toronto could have won very easily. And then, they were 2 outs away from losing the whole thing in game 7, 2 outs away. And the most unlikeliest of players hit a tying home run and they came back to win it in extra innings. And I still don't believe it happened. It was the most crazy, bonkers, amazingly competitive world. I think it's going to be one of the best World Series ever.
That's what everybody's saying. And I will say that I tried to show my support. I went to bed, I crawled into bed Saturday night and I put it on. I don't think I lasted 2 pitches, but I tried.
I mean,
and then I also,
baseball is wonderful for falling asleep, except this one, which was it was just incredibly exciting. I feel like the whole series was very exciting, like adrenaline pumping, like could have gone either way, almost every game. So I couldn't have fallen asleep to it, but yeah.
Understood. And it's what you want out of sports. I also tried on Sunday morning to read the recap, but since I don't know any of the players, it was very hard to follow. The one thing, though, that did sound interesting, and I'd like to hear your thoughts on it, because you mentioned their bullpen on Friday when we talked. The pitcher who was in
the lack thereof
came back in game set. Is this? Yes.
Okay.
So,
it's better than that. So yes. This pitcher who won game 6, he didn't have the greatest of outings, but it was decent. And he pitched 96 pitches, which, usually cut off a pitcher like at 100, 110 max. So he does that. And then the next night comes in as a reliever. And you don't pitch back to back. Like you just don't. And if you're a starting pitcher, you don't come in as a reliever. But here's the thing. All 4 of the Dodgers starting pitchers pitched in game 7. Starting pitchers pitched, meaning only one of them started and 3 of them came in as relievers. Like the whole thing was just bonkers. It was just crazy and improbable and amazing.
So are we sensing that antagonism towards the Dodgers is going to be at an all-time high?
I mean, it's always going to be high.
Okay.
Yes. But they for sure are the team to hate right now. And Toronto was amazing. The Blue Jays were amazing, and I feel bad for them. They'll be back. But I kind of hope the Dodgers come back too and win 3 in a row.
Well, Derek, he's an Eagles fan. He has a shirt that says "Nobody likes us, and we don't care."
Yeah.
So maybe the Dodgers need to be sporting that.
Yes. Mm-hmm.
All right. Well, something we do care about.
Yes.
Everybody cares about the accounting labor market, right?
Oh, okay.
Maybe not everybody cares about the World Series, but everybody cares about the accounting labor market. And that's what we're going to be talking about once again today. Once again, I'm going to say it thrice, about the accounting labor market.
And so this is our thrice episode, thrice episode on this topic.
I have asked you thrice. Yes.
Yes. So clearly we think this is an important topic.
Clearly we do. And so I thought what might be useful today is to make sure that everyone listening to this episode is up to speed. So what we're going to do is we're going to spend the first part of the episode recapping what we've discussed on the prior two episodes. I think that will set us up nicely for welcoming our guest. Does that sound good to you?
It sounds like a plan.
Okay.
Yeah. So we've talked before about accounting enrollments, and we've talked about them a couple of times because the numbers are like kind of shocking.
They are. Yeah.
Yeah. So if you look at the last decade of data, from about the 2012-2013 academic year up until the 2021-2022 academic year, undergraduate enrollments in accounting have dropped about 17%.
And as good researchers, we always want to compare that to some sort of baseline, right? So what we know is that 17% decline is actually more significant than the general decline in higher education enrollment that we see. That's about 13% over the same period. So we're losing accounting majors at a greater rate than we're losing college students on average. And some top accounting programs in the US have reported drops as high as between 20 and 50% of a decline in their enrollment.
Now, while not all undergraduate accounting recipients of degrees go on to get the certification to be a public accountant, some do.
Yep.
And so we can also look at how the undergraduate enrollment pipeline affects the CPA exam pipeline, basically. And we saw that the number of first-time candidates sitting for the CPA exam declined 33% between 2016 and 2021. So an even larger decline over an even smaller period of time.
And I like the way you said pipeline and you used that phrase on a prior episode, because when you think about it, it's almost like a funnel, right? Like maybe that's another way to think about it. The most working accountants you can have is going to start based on those who are studying it in college. Then you've got that hurdle of passing the CPA exam and getting your CPA license, which is actually about more than just taking the exam. And then that's going to affect the number of CPAs who are working professionals. And so, you know, maybe it's not surprising that the working professional population is also shrinking based on everything we just said, right?
Right. Mm-hmm.
So the number of accounting professionals in the United States in 2022 was down almost 16% from where it was just 3 years earlier, 2019. And part of that is due to new entrants drying up, which is consistent with this enrollment problem that we're talking about.
Right.
But another massive part of it is attrition.
Yeah.
So almost 300,000 accountants quit their jobs during the Great Resignation between 2019 and 2021. That's such a big number.
That's a really big number, and it's going to be compounded by the fact that there's also a looming so-called Great Retirement coming up, because the American Institute of Certified Public Accountants has found that about 75% of working accountants have reached retirement age, and they did so back in 2020, 5 years ago. So 75% of working accountants could theoretically retire.
So we've got problems at all points. We have fewer people entering, people during their working age leaving, and then people who are nearing retirement are going to be retiring soon.
Yep.
So when you look at all of that together, it's really no wonder that accounting firm leadership is starting to sound the alarm.
Yep.
So according to one survey, 99% of the country's top accounting firm leadership claims that they cannot fill their current U.S. job openings.
Okay, so you and I are accountants. We got degrees in accounting. We got the CPA exam. We now help educate others in accounting. It's clear how this affects us.
Correct.
I think what might be missing for the average listener is, why do they care, right? Why do they care about the accounting profession? Well, we've already seen that fewer professionals available to do the work means rising costs. And we've had prior episodes on how difficult it is to file your tax return in the U.S. Most people don't do it themselves. They outsource it. And these tax professionals are charging new clients about 25% more than they were just a couple of years ago.
That's absolutely right. And even if you think to yourself, oh, I don't go to a tax accountant, I use TurboTax or whatever, well, they're going to charge you more too. Like that is a tax professional behind the screen there. So even if you think I don't go to an accountant, you're still paying more for your tax prep services.
Yep.
All right. So if the statistics and the consequences are so bad, then the big question is, why is this happening? Because if we understand why it's happening, we might be able to try to stop it or course correct. In our very first episode, when we looked into this, we focused on the supply side barriers and maybe some perceptions with the attractiveness of accounting as a job and how the supply side was potentially causing problems.
Yeah, and some of those perception problems include that students, they think accounting is boring.
Yep.
Stressful.
Yes.
Requires long hours.
I mean, they're not wrong.
Agreed. Some think it's just bookkeeping and bean counting, which is not very exciting and also not very accurate. But like public portrayals of accounting haven't helped us. Like the accountants on The Office, I don't think really inspired people to go become accountants. And I'm going to go a step further and say the movie The Accountant,
correct,
likely did not do anything to help our reputation at all.
No, I can't really think of a single like pop culture reference where the accountant comes out as the cool person.
It's very rare. Yeah.
Yeah. And so all of those things do kind of point to a classic supply problem. On top of that, there's the idea that maybe wages are too low, licensing barriers are too high. Like we talked about, you have to take that CPA exam, which is no fun. It's just not. It sucks. Mm-hmm. Many states have a 150-hour requirement, which means you may have to get a master's degree before you can even sit for the exam to begin with. Some states have work requirements where you have to do some work before you can get licensed. So it's a pain, right? Yep. It's a pain from the supply side. But we also have to take into account the demand side explanation. And in this particular setting, sitting here in 2025, we have to think carefully about the role of technology.
Yeah. And so our second episode on this topic, we had researcher Andrew Sutherland from MIT talking about some of his co-authored work where they suggest that we actually need to look at the demand side. And the point there is that firms may not actually be demanding as many accountants as they used to do. And all of these management leadership of the accounting firms saying that they want to hire more people, maybe they're saying that, but they're not actually willing to hire the types of people at the same rates that they hired previously because they're able to supplement things with technology.
And we know that students want jobs after graduation. So if students either see a limited demand or they anticipate a declining demand, they might just not be interested in getting an accounting degree.
Right.
So Andrew and his co-authors hypothesize that technological investment in things like software used by accounting firms, think about AI, any sort of thing that can automate human tasks or augment human tasks,
yes,
might be making existing employees more productive and possibly making some existing employees redundant.
Mm-hmm.
And so this technological transformation in the industry might actually be a cause of reduced demand for certain types of accounting professionals, especially compared to other business sectors like finance, where maybe those technological disruptions are coming, but they're just not here yet.
Right. So this decline may not just be solvable by increasing salaries to increase the supply side, but they might instead reflect a fundamental shift in market demand for entry-level accountants who would be graduating from our programs and taking that CPA exam. Their paper also raises the argument, though, and Andrew discussed this on our episode, that new accounting regulations might increase demand for accountants.
He did, and that is exactly where Katie comes in with her dissertation. The TCJA was, generally speaking, the most sweeping tax legislation of the last 30 years, so one could argue that if anything was going to increase demand for tax professionals from a regulatory perspective, it should be the TCJA.
Agreed. Our guest today is Katie Dougherty, a doctoral student in accounting at Indiana University. Prior to entering the PhD program, Katie worked as a manager at a regional accounting firm in Nashville, Tennessee, providing accounting services to small businesses, and spent several years in tax at a Big Four accounting firm. Her research to date focuses primarily on the real effects of tax policy and tax human capital. Katie will graduate this academic year and is looking for a position as a faculty member. She's here today to talk about her dissertation, which examines how the Tax Cuts and Jobs Act affected accounting firms' demand for tax accountants. Katie, welcome to the podcast. Thanks so much for joining us.
Thank you. I'm excited to be here. Thank you so much for having me.
It's our pleasure. We're really excited to talk today about your dissertation. Tell us a little about what your research question is and how you even came up with this idea.
Yeah, so my dissertation is studying how the Tax Cuts and Jobs Act of 2017, or the TCJ, affected public accounting firms' demand for tax accountants. And I was really interested in just how tax policy and regulation affected taxpayers in general, like how they comply with it, how they interact with it. And so one of those areas was like, how does it affect the human capital and the people that are actually doing this sort of work? And I was actually working at PwC when the TCJ happened, so I have a little bit of lived experience.
That's cool. What was your experience at PwC at the time?
So it was really an interesting time, and a lot of the kind of rhetoric from the partners and higher up people was that this was kind of a once in a lifetime or once in a career type of tax reform that you would see.
I mean, that is what we thought at the time. Of course, we've seen two big bills pass since then.
But. Right. And so I think that, I mean, that's kind of the interesting part now is like seeing all this policy continuing to change at a higher rate. And I'm hoping that my dissertation can speak a little bit to that.
So kind of expanding on Lisa's question and getting into the meat of your paper, the theory behind your paper, why would something like the Tax Cuts and Jobs Act change demand for tax professionals? And in some respects, I think it seems obvious. In other respects, I'm not so sure, because if we already had an existing tax law that we had to comply with, and now that law has just changed, doesn't it just change the way we comply, as opposed to increase the amount of effort that it takes us to comply? So just talk a little bit about why you think you would see an effect.
Yeah, I mean, I think that's a really good question. And I think that a lot of people have a lot to say on both sides of that. And one of the things that I think about what was going on at the time of the TCJ was that people were so uncertain about how these laws would apply to them. There were so many things that changed at the same time, and there was a lot of complexity to it that had not yet been explained to taxpayers through regulations. So I just think it was a time when people really wanted the expertise and guidance that that accounting firms could offer them. And so it could have created work that was not previously being done by public accounting firms, or it could have just created additional work for current clients of accounting firms. I think there's kind of multiple ways it could have increased this workload on them.
Yeah, and I don't know what the median age of like a tax director is right now, but you also could imagine a situation where you've lived your entire career under one set of rules, and then maybe in the last little bit of your horizon, those rules change and you just think, I don't really want to learn these rules. I'm going to outsource it and let somebody else learn it for me.
Yeah, I think that's very true.
Tell us a bit about how you go about testing what happened in these accounting firms following the Tax Cuts and Jobs Act.
So I use job posting data to measure for demand, which is really cool because I'm able to see at the office level and I see it as the job is posted, so I can look at it by month. And so the TCJ was enacted at the end of 2017, but was effective for tax years beginning on or after January 1st, 2018. And so basically I, on an office month level, I just look at the count of job postings that are classified as tax. And so the nice thing about looking at public accounting firms specifically is that they're pretty standardized in how they label their job postings. So it's pretty easy for me to identify when a job is tax and when it's not, just from the job title. So I essentially compare the count of job postings before the TCJ and after the TCJ. And then I also scale it by total tax and audit postings to try to control for just any sort of general growth in the office so that I can make sure that the increase that I'm seeing after the TCJ is really kind of an abnormal increase attributed to tax rather than just any public accounting jobs.
And the focus on tax, of course, is because the Tax Cuts and Jobs Act was primarily tax regulation as opposed to things that would impact the audit side or the consulting side.
Yes, exactly. I mean, I would expect that a lot of what taxpayers needed at the time was tax advice.
Right.
Of course, there was reasons that auditors would also have to adapt to the TCJ, but I wouldn't necessarily expect that brand new audits that weren't existing previously were coming about because of the TCJA.
And to the extent that they needed that additional expertise for auditing, say, the provision or something, usually they're pulling in a tax professional anyway.
Yeah, exactly.
And I really like the fact that you are able to use auditors as a control group, because if we all remember, one of the promises of the Tax Cuts and Jobs Act was that it was going to stimulate the economy. And so you're able to say it's not just that we're seeing a whole lot of economic growth that's leading to a demand for more public accounting professionals across the board. You're able to really isolate that it's tax professionals and not that general increase because of economic growth or other factors that are correlated with time.
That's a good point.
Yeah, exactly. And I think the fact that I'm able to kind of control for that within an office and within a month, I think that really kind of helps my story there.
So what do you find? Give us a summary of your results, and maybe when you're doing that, tell us, did any of those results surprise you or make you particularly happy when you're in that dissertation phase?
Nothing makes you happy in the dissertation phase other than getting stars on results.
Relatively happier.
All my results made me happy. I was happy to find results of any sort. So like I'm sure you can imagine from the lead up of talking about why I would expect to find an increase. I do find an increase. I find a greater count of tax jobs, and I also find a greater percentage of tax jobs relative to audit jobs.
So looking big picture here, like what do you think are the big takeaways from this? What should we be learning from your study?
Yeah. So one piece that I've added more recently has been looking at LinkedIn employee resume data.
Okay.
Because the job posting data really measures demand well, but it doesn't measure how well that demand was met. The other interesting piece about when the TCJ happened was, I know you guys have talked about this a lot too, but firms were starting to note that maybe the supply was not meeting the demand for incoming graduates into the accounting profession or just accountants in general. And so I use this LinkedIn data to look at, okay, we see this increase in postings that is kind of abnormal after the TCJ. Do we also see the same increase in hirings? And I find some initial evidence within Big Four firm offices that we don't. The hiring rate looks pretty consistent while the job posting rate shoots up.
Interesting.
So I think that for me, the takeaway is really that if you're passing this broad and complex regulation where taxpayers will tend to rely on tax professionals, it's important for there to be enough tax professionals to actually provide that service to them.
Yeah. So Katie, you are looking for an academic job this year because you'll be graduating with your PhD in the coming spring. Describe your dream job for us.
Okay, sure. I really want to end up in a place that is really supportive of the research that I want to do and is also really supportive of high quality teaching. And I'd love to be in a department where the faculty are really collegial and interested in working together and learning from each other.
That is the dream. Yes, I agree. That is also my dream academic position.
Well, thank you so much for being a guest on the podcast. And, I'm biased, obviously, but I think your dissertation is really interesting and accessible. And I think both of those things are going to serve you well on the job market.
Well, thank you guys so much. I appreciate you having me. It's been a dream to be on a podcast. So one dream come true.
Check it off the list.
One of many coming your way, I'm sure. We're excited to see where this takes you and wish you all the best of luck on the market.
Yeah, thank you guys so much.
So it's time for the good, the bad, and the ugly. And so we're starting with the good here. I really like Katie's topic a lot. I like that she's stepping into this debate over what is happening with demand and supply for accounting professionals. And she's really focused on the potential role of the demand side, which is really critical to acknowledge alongside the traditional focus that most accountants have as a knee-jerk reaction, which is on the supply side.
I agree. And obviously being biased as a tax person, when Andrew said accounting regulation, I don't think he was thinking about the TCJA. Or he wasn't thinking about tax law changes, right? Because we had it on in 2024, I think, and he's like, oh, if only we had a big regulatory shock, we might. We did have a big regulatory shock. It just happened to be on the tax side, where I don't think everybody's mind automatically goes. Like, no shade to Andrew at all. I think most people think about auditing regulation or accounting standards changing, and that being the driver. Right. So I appreciate the fact that, even though I believe, my gut tells me that tax accountants are a smaller part of the overall accounting,
I think that's right,
universe. Yeah. It's important to see how the TCJA potentially shifted demand for their services. And so I agree with you. I like her focus, and I like that she's looking in a setting that's going to be powerful in addressing her research question.
Yes. And I also think there's a lot more that we can do on this topic. Like, she's going to spur, this is the first, I think, of many papers. She's going to spur a line of research into this general area about, using a shock to regulations to increase demand for tax accounting or other types of accountants. And we could go back further and see, okay, is this having an effect higher up in that funnel, in that pipeline, right? You could go back and you could look at enrollments and the other things that we talked about, CPA exam, things like that.
I agree. And I'm happy you brought that up, because it also kind of segues into the bad, which is sometimes when you have a dissertation that can spawn a lot of work, people want you to do everything in your one paper, which is not fair and it's not reasonable. And so, one of the things I've tried to coach Katie up on, because people want 15 other tests, right? You talked about wages. People want to see increasing enrollment. People want to see how it changed the fees that they're charging. Did they hire the people? If they didn't, what's happening to them? Is the work of a lower quality? I mean, there's so many things, which is great, because that's what we're supposed to do. One paper is supposed to spawn another, and that's how we expand the literature. But sometimes when people get, all excited and they think they already know the answer to the first question, like, well, yeah, sure, demand increased, let's just move on. Job postings went up, let's just move on to the next thing. I'm hopeful that, when she gets around to submitting the paper, she can, draw reviewers who are willing to let her paper be what it is, and then be the first, one of the first papers in this area. And then we can learn more in 5, 6, 7 other papers.
Right. And I mean, we're already seeing that. And I don't think that these are competing papers, because they're asking different questions. So there was one at the UNC Tax Symposium that we saw earlier this year that answers the question, what's happening with respect to demand for accountants, but within firms, and not the accounting firms themselves, but in the big multinational taxpayers and the smaller firms that make up, a big part of the economy. That's a different question. It's an important question, and I want to know the answer to that question, but it's different from this question. We need both papers. We're going to need a lot of studies on this.
I agree. And I like I said, I'm just hopeful that people continue to have an open mind and just realize we're not going to solve everything, to your point, with one paper or even 2.
Right.
Another bad thing, not about Katie's dissertation at all, but about the setting, and you sort of referenced it earlier. The reason her setting is so powerful is because we were able to say the Tax Cuts and Jobs Act was it was tax reform. It was the biggest, tax change in 30 years.
Once in a generation.
Once in a lifetime, or once until
every 3 years? Every 3 years. 1 year?
So like you said, since then we've had the Inflation Reduction Act. I'm going to just even ignore the CARES Act, but there was tons of tax.
Go straight to OB3, sure.
And then you got the Inflation Reduction Act, and then you have OB3. So, again, I think that this is going to serve future researchers really well, because are all of these things going to increase demand? Probably not. What are the subsequent effects? What is the sweet spot of time between one major tax legislation and the other when you do need to sort of recalibrate your workforce? Like, I think there are a lot of interesting questions that can come out of this, especially given how frequent we see big tax law changes.
In the last 5 years, yes. Last 7 years, I guess. I'm going to go ahead and say that 3, maybe 4 big ones in a 7-year period is too much. It's too many. It's too frequent. And so that's my ugly here, is just everybody just settle down. Like,
Yes.
I know I'm all for change, right? It keeps things exciting for us as researchers. It keeps us on our toes as educators. But enough is enough. Like, you can't keep jerking people around with all these changes every couple of years. It's not good for the economy. There's plenty of research that shows that this type of uncertainty with respect to what the laws are going to be, it hampers growth. Mm-hmm. Like, what company wants to, try to make a big investment and say it's going to pay off under the current regulations if you think that they're just going to change 2 years from now?
Circling back to the top, I'm just happy that I'm not working on my dissertation anymore.
Oh, thank goodness. Yeah. Yeah. And God bless people like Katie who are.
Yes, you will get through it eventually. And it's like John Robinson said, you need it to graduate. You need it to get a job. And, cherry on top is if you get it published, but you just gotta see it for what it is, which is a means to an end.
No, we are producing and disseminating new knowledge.
Sorry. Yes, you got to see it for what it is.
Yes.
The production and dissemination of new knowledge. Thank you.
You're very welcome. Well, that's all we have time for today.
Be sure to join us for more tax nerdery on future episodes of Taxes for the Masses.